A very, very, very good morning to you all. We're starting our coverage of American stocks here as they're beginning to report earnings. And PepsiCo, Delta Airlines, they're always the first to kick off this earnings season for us. And we start with PepsiCo, which has already posted a huge profit. That's right, going against the statistics. After all, what do we have? We have a world seeking weight loss, looking for weight loss pens. We see fast food companies reducing the fat content on their menus, offering healthier and more protein-rich options. But PepsiCo, whose main product base is still what we could call unhealthy food, saw a significant boost in its latest earnings report. And when we look at some of the main highlights here, right? Well, to speak quickly, we had revenue that skyrocketed here, $23.95 billion, and earnings per share were $2.21, an increase of 137%. But this is an accounting increase, folks. It's not that the company actually grew earnings per share by 137%. Why? Because when the depreciation of accounting charges was taken into account, organic revenue grew 2.4%. And yes, what is still strengthening this demand is the international market in Asia and Europe, because in North America they are already declining. Snacks, beverages, and soft drinks fell 4% in the quarter, meaning Americans are becoming increasingly health conscious. Basically, the company is still very optimistic, and its projections are for growth of 4 to 6% in the coming quarters. And now we move on to what we like and what we specialize in. Price direction. So, Gustavo, that's great. But what about PepsiCo's price direction? Is it worth buying at this moment? When a big earnings report like this comes out, people already want to rush out and buy it. But that's not exactly how it works. Do you know why? Because when we coldly analyze the price range, the trading volume, the direction of the trends, which is our specialty, we can clearly see that $165 has been considered expensive for the company since December 2022. So since December 2022, every time it gets close to $165, it drops. It approached that level in May 2024, in September 2024, and also in February 2026. So it shows us that $165 is relatively expensive, and $123 is relatively cheap. So it has been moving within this sideways channel, as we call it. So we don't have any clear direction or opportunity to buy at the moment. When we look at what happened this quarter, in this quarter where the profit was excellent, we saw a drop in the stock of 11.90%. Yeah, that's quite significant. And yes, it could keep falling even further. So just because the profit was good, the news was good, doesn't mean we're at the best moment to buy PepsiCo. Yes, it does have the possibility of continuing to fall, down to $123. Whether that will actually happen, we can't say for sure or guarantee that it will. Obviously, the market has many nuances, but the expectation is that in the medium term, it could continue moving in a more bearish direction. And if that happens, if you buy the shares today, you'll only lose money in the coming weeks and months. So it's not much better. It's better to be cautious, set aside the information from the earnings report, and simply look at what the investors, who are not few, by the way, with an average of basically 36 million shares traded every week, are doing. It's much better for us to wait for all this trading volume to turn upward, and then we can buy in a more informed way. Meanwhile, very good, PepsiCo. Congratulations on your earnings report. You are a company that truly demonstrates the strength of American companies. But at this moment, looking at the chart, it's not the best time. It's worth waiting a little longer. God bless you all. Take care, everyone. Bye-bye.